Hi, welcome to Market Alert for Thursday, the 2nd of April 2020. So yesterday, April Fool, stocks suffer worst start to a quarter since Great Depression. You can see there, fooled. So let's have a look at the markets first. It's a short one today because we're waiting for the jobless claims figures, which I'll come to in just a moment. So starting with the daily chart, I always start with this, get the bigger picture. Yesterday you can see the market move lower, trading down to the 38% retracement, which is drawn from this low to this high. So the market is sitting on the 38% fib at the moment. I'm just going to remove this one just to make it a bit easier. And there you can see where we are at the moment. So the market developing a bit of a sideways move, but like I say, it's waiting for these jobless claims that are going to be released today at 1:30. So the unemployment claims 1:30, and again they're looking at another 3.6 million to be added to what we've already got. However, there's a bit more about that in just a moment. So yesterday in the main events, we see the Fed or somebody moving the market to the upside to try and keep things moving. But as soon as prices close back below the 200 MA, and then the 20 becomes a resistance, and then the 50 becomes a bit of a support, and then eventually the market breaks and prices trade down to the S2 level. And the pivots there get a bit of a bounce off this one, back to the 50 bar moving average, and then back through the 20 bar as we head down to the close there for yesterday. And then you can see profit taking at the end as prices are brought back. And overnight prices trading up to the DP level, the 200 MA, as you can see there, and sitting around here at the moment. We've traded through the 200, we came back, we had another look at it. This is not uncommon. Markets moved higher, trading through the DP, and then prices have stopped. And the reason for this, if you have a look here, from this high to this low, you'll see the market stopping bang on 76%, and the market then moving lower. And again, if we go from this low to this high, you'll see the market also once more stopping at 62.76 there at the moment. And if we go from here down to here, you'll see the market stopping at 76% there as well. So the market's in a fib trading range at the moment, and like I say, it's waiting for the unemployment figures. Let's have a look at the implied volatility. This sneaking up a bit yesterday. The option sellers obviously wary of the release of today's initial job claims. So again, adding a bit of insurance to the option premium there. Still below the 20 bar moving average, so remaining amber in the visual implied volatility. Quick glance there. Prices below the 20 bar moving average. And then, of course, as I say, the market's waiting for this, the projected 6.5 million initial jobless claims tomorrow. Question mark, of course. But interesting article here. Researcher Andrew Zatlin, who has regularly been the most accurate predictor of the labour market price prints, expected no less than 2.4 million initial jobless claims. This was last week. He was off by 1 million. The actual number was 3.28 million, which is what we saw. Quadrupled the previous record. So he's predicting today, he seems to be the best in the industry, whereas the Fed are expecting 3.6, was it, that we saw? Let me just double check that. Wouldn't to misquote the Fed. Yeah, 3.6. He's predicting, as it says here, going back to Zatlin, he is now expecting around 6.5 million jobless claims. So this is what it looks like on the chart. I've actually put 6 million in there. But you can see last week we got 3.2 million, and that's 6 million. I mean, this is massive, because for years this would just remain very, very quietly, around the sort of 200,000 level. Staggering, absolutely staggering. This is nothing yet. The likes of Bill Holt, Michael Pento, these great traders and fund managers are looking around 47% unemployment rates, which is massive if it comes to fruition. But at the moment, if Zoltan's figures or projection comes to be correct today at 6 million to 6.5 million, then that's already close to 10 million who've lost their jobs within a 2-week period in the US. As I always say, if the US sneezes, the rest of the world catches a cold. Okay, that will do it for this one. All I would add to this is that if it comes out at 3.6, this will give them the excuse to move the market to the upside because it's already factored in. But if it comes out at this sort of here at 6 million, 6.5 million, then we could see the market continue to move to the downside in the daily chart, heading down towards these other fib numbers that we have here, and then ultimately down to the recent low. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.